Let's get the numbers, Rick.
Yes, our May read on the Consumer Price Index on the headline number, expected up 0.2, comes in on the light side, up 0.1%. That follows, at least for now, unrevised up 0.2. Up 0.1 will be the lightest since it was minus 0.1 in March of this year. If you strip out the all-important food and energy, it remains up 0.1%. That's 0.2 lighter than we were expecting, 0.1 lighter than the rear view mirror. Up 0.1 equals where we were in March of this year. To find a lower number, you're going to 0, which was January of 21. Now, let's take the year-over-year perspective. Expecting year-over-year headline up 2.4, and it arrives exactly up 2.4. That is 0.1 hotter than our last look at 2.3. It equals the 2.4 in March. 2.8 was February. That's the higher number we're comping to. Finally, if we go year-over-year core ex-food and energy, it's up 2.8, 0.1 lighter than we were expecting, equals where we were last month. 2.8 actually now is third consecutive month in a row. If you want a smaller number than that, you're going all the way back to March of 21 when it was up 1.6. Now, I always like to look at the indices. These indices go back quite a ways. If you look at CPI headline index, it goes back to 1913, and the number today, 321.465, might not mean anything to viewers intrinsically, but it is the highest level on this index ever, going back to 1913. That should mean something. And if we strip out the all-important food and energy, it comes in at 326.854. Once again, this number started out in 1957 on the core. It's never been higher. We see that the pre-opening equities, well, they have improved rather markedly. We now see green, and interest rates have dropped dramatically. We're hovering just a whisker under 4.5% in the 10-year. We're now at 4.44%. So definitely the cooler than expected monthly numbers, once again, are going to create that wonderful weekend armchair quarterback scenario of trying to look at the outlying months over the next 3 and 6 months and trying to discover what they may be using the current monthly estimates. Now, I'm not saying that's a bad thing to do, and inflation certainly looks like it is cooling a bit, but as the year-over-year numbers do tell us, Joe and the gang, we're still a little bit on the high side with a 2% target. I'm interested to see if anybody at CNBC today talks about the notion that the Bureau of Labor Statistics isn't doing an adequate job of polling for CPI due to freezing of hiring or maybe even cutbacks due to the current administration. My one question would be, what was their enrollment and what was their rank in staff prior to COVID? Let's see what the comparison is. Joe, back to you.
And why would